What's going on, guys? Today it is the middle of the month. We are going to do a market update on Atlanta, Alpharetta, and how to handle this fourth quarter going forward as far as real estate goes. Now, it was a big week here. We did have the Fed cut interest rates 50 basis points yesterday, and mortgage rates have started coming down. So there's a lot of talk of how that's going to impact affordability, inventory, and what to do going forward, especially if you're potentially looking to move in the next few months or in the market for a new home. Now, we're going to touch base on a CNBC article really quickly that does a little bit more on the national scale. And then we're going to go through our local market where we're really just seeing the greater Atlanta area as well as Alpharetta and surrounding towns. And I can kind of give you an idea of what to expect as we approach the fourth quarter and what we've seen the past few years that may be things to look out for. So, one of the big things here that they talk about is the home sales did drop more than expected, but prices are still elevated. Now, what we're seeing is almost 4% lower in a year over year of homes sold compared to elevated pricing that is up 3%. So, the tough thing here that buyers need to remember is a lot of this information, especially when we look at August numbers, it's going to be trailing data. Now, to get an August closing, we typically have to back up to June and July and then have a contract take 30 to 45 days to close. So it is something that we do want to take this into account, but we have to be cognizant of the fact that a lot of those contracts that were made in June and July were at much higher interest rates. We had high sixes, sevens. So it's a very different dynamic compared to what we're seeing now. All of a sudden, as summer has eased and we go into September, the interest rates have come down. We're in the low sixes, high fives, depending on the lender. And that really does factor in a lot more to what we could see going forward as far as an increase in sales compared to August. It might be a little bit of end of summer inflection point and something to just look out for. Now, one of the interesting things that they do touch base on, and we'll talk about this more for our area, is year over year, inventory is up over 22%. So you have lower home sales, more new inventory, but elevated pricing. Now, a lot of that kind of just goes into an overall supply and demand issue. I've noticed personally that, especially the past 6 months, things that earlier in the year would have sold very quickly, maybe not gotten multiple offers, but at least an offer within the first week. It's now taking longer. Buyers have more options. They are becoming very picky. And you add in the unknown of, are we in a recession? Are we headed to recession? Will there be a soft landing? It gets a little bit confusing, especially going into end of the year where you have tax loss harvesting, um, holidays, people need to allocate funds differently, and an election year. It's just a lot to take in to figure out what's the best approach and am I getting a good deal or am I still overpaying for a home? So what we're going to do is we're going to dive in a little bit more to our local market. This is a slide deck that was presented at our office meeting this week, and it really kind of paints a picture in a nice way of what's going on in Atlanta and Alpharetta, and how is Georgia different, and how can we think differently about our market for our needs. Now, one thing that is I was surprised to see this, is that home prices actually went up in the past 7 of 8 presidential elections. I think a lot of people get a little overly worried about what happens on the election cycle. And just like we talked about the real estate being trailing data, a lot of the election stuff is as well. A previous party has already had their bulk of the time to do what is going on, and a new party coming in is still capturing the tail end effects of what the previous party did. So it's not something where we immediately expect to change, especially if they don't have majority control and it becomes harder to pass legislation that may affect housing pricing in general. Uh, so if we look at kind of just the overall scope of things, anything over 6 months of inventory is typically what we refer to as a buyer's market. That just means there's an excess of inventory on the market. And if no more homes hit the market, it would take 6 months for all of the existing inventory to be purchased. On the flip side of that, a seller's market is usually less than 6 months. This is what everyone's been very familiar with, especially here in Atlanta and Alpharetta the past few years. We have actually been in times where we've had less than a month's worth of inventory as a whole, which is crazy because that means it literally only takes 1 month to sell all the properties on the market if no new properties hit the market. And that was just a major demand spike, which led to an even larger spike in pricing. Now, as you can see here in 2020, especially after the lockdown, and as we came out of that, we really kind of hit that lowest point of not only affordability, but also as far as the seller's market. It is starting to tick back up as inventory increases. Now, I know there are still multiple offers in certain markets, and it depends on your school district and the property and the subdivision and the area you are. But in general, because we are seeing an increase in inventory, it is becoming a little bit easier to find a property or not necessarily have to overbid for a property. And that's really what we're looking for. So right here, we're talking specifically about Alpharetta, Canton, Cumming, Johns Creek, Milton, and Roswell and Swanee. That's kind of your bulk of your North Atlanta suburbs. That's where I live. That's where I'm focused heavily. And what we can see here in the light green is actually the for sale listings. And then in the darker green is the sold. So obviously we see that curve here. The light green is the increase in inventory. And then the dark green is starting to taper off after kind of maxing out the past few months. All this says here as well is we're seeing an increase in inventory. Sales have kind of stalled and they're coming down a little bit. Even on the pended side, this red line is pending sales. So you saw it kind of hit the spike, flatlined a few months, and now we're trending down. Now, one thing to note here, especially with Greater Atlanta and Alpharetta, our market, for the most part, is dependent on the school cycle. So, March to end of June are really the bulk months where we're going to see the most transactions because people are moving around the school year. Our school year starts here at the beginning of August. So, usually by then, a lot of people have already gotten into where they need to go. And then we're kind of just in this transition period until we get to the fourth quarter. But we're going to talk about how that impacts things as well, because it is contrary to what a lot of people believe. And it does create a unique dynamic here, at least in Alpharetta and Atlanta. So this is our market specifically, those same towns we just talked about. What you can see here is the for sale listings, the change year over year, 54.5%. That means there's 54.5% more homes available than there were a year ago. That is a massive change, and it creates a lot of options for buyers to choose from. The tough thing here is buyers are always going to think that there's a better deal around the corner, especially when they start seeing inventory increasing. And sellers are always going to look in the past and think, well, a house around the corner sold for X. I should be able to get at least that, if not more, because prices are still going up, right? Not always the case. There are certain areas where we've seen prices peak and they're actually starting to come down a little bit depending on the neighborhood or kind of that overbidding that we saw coming out of the COVID boom and really just the changing dynamics. I think some of the markets here, some of the towns, neighborhoods got a little overextended for what they are. And now we're just correcting. But we are still seeing those hot school districts, those hot neighborhoods, especially if they have things like great backyards, pools, full amenities, they're going quickly. So there are still a lot of buyers that have that need to move, and that's the important thing. Again, these numbers are just crazy. These bottom two, what we're looking at is actually the sold and pended properties. So they are down slightly from a year over year with that increase of inventory. That just creates a unique atmosphere, especially in September. And September is always one of our slower months. Here we talk about the months of inventory, where in August of 2023, we had 1.7 months of inventory. Now we're up to 2.9. So that's really showing that excess inventory coming to the market and things just taking longer. The average sold price has crept up though, where it was 725,000. Now we're at 744,000, and we've added a week to days on market. So it just has to set proper expectations for sellers that you're not going to necessarily see things happen immediately. You have to get comfortable and being patient a little bit. Back when I got into real estate, especially coming out of the great financial recession of 2008 to 2010, it was very common for homes to take 4 months before we got offers. And it's just, we've gotten so adjusted over the past few years to things flying off the shelf that sellers have unrealistic expectations sometimes, and buyers are still jittery of feeling like they're overpaying, that they have to get into a place right away when they actually may have a little bit more leverage than they thought they did. So this is specifically what we're seeing in our market, over 750,000, which is prominently a lot of the neighborhoods up here, especially as the builders the past few years have gone on the luxury side. We still have a 50% plus increase in inventory, but the sales are actually higher than they were a year ago, which is very encouraging to see. Um, Similarly, we have the months of inventory going from 2.5 to 4 months for that above $750,000 mark. The average sold price is still hovering right around that $1.165 million. And average days on market only went from 24 to 28. So for a luxury property, these are very, very strong numbers. We're still typically having homes move in less than a month, and that's very encouraging for sellers. Now, one thing that I like people to be mindful of as we go into the fourth quarter, this is one of my favorite times to purchase property, or for clients to be able to purchase property. Because what we're seeing is anyone that's trying to maximize home value and get their home on the market for top dollar will typically be in those spring and summer months. It shows extremely well outside. Everything's green. You have all those excess buyers moving around the school year, and it creates an opportunity to get multiple offers and that highest sales price. The homes that didn't sell in the summer that are still on the market now, the owners start panicking a little bit. They know they missed the boat, and we start seeing price reductions happen more often, more concessions being offered as they try and capture and compete for the next buyer entering in the market. Now, as a buyer, I think it's important that you're kind of buying into the fourth quarter of assumed seller fear. Sellers are fearful that as we get closer to the year ending, there aren't going to be as many buyers. All of a sudden, they have holidays, they have tax bills coming up. They need to get their properties moved. Odds are, if a home is still on the market now, the seller has to sell for a specific reason. And that kind of creates a different negotiation dynamic from the buyer side, where yes, prices are still elevated, but inventory is increasing and you kind of hold the upper hand at the moment. I would press people more for concessions, things that you may not have asked for previously with the inspection reports, or just do a little bit more due diligence and feel comfortable with what you're getting into. Now, the unique thing about Alpharetta is we've been very isolated from the rest of the Atlanta market. Atlanta market as a whole in town has seen a little bit of a slower growth than we've seen up here. And some of that is just the exodus out of the city up north into the suburbs. Parts of it are this area is just growing, and it's becoming an area where there are a lot more job opportunities. They're gross. There's capital expenditures where companies are putting investment dollars to build out a lot of these suburbs and attract more people from the city. So when it comes to relocating, what we typically see is our fourth quarter is actually our second busiest outside of our second quarter. And a lot of people don't think that way. They think that's kind of odd because all of a sudden, what do you mean? We're in the holidays. Who wants to move around the holidays? But what we see is a lot of companies and corporations, when we're in decent hiring cycles, they're trying to hire ahead of the next fiscal year. So they're trying to get employees to relocate before the year end and finish their budgets for the next calendar year. So we actually see a lot of shuffling of people, especially in that mid October to end of December range, where they're trying to get into the new property before the end of December. So for a seller, if you have to sell this time of year, it's nice knowing that you're going into an environment where there are buyers entering the market constantly. You could have your house sit on the market for 2 months and then all of a sudden get multiple offers in 1 week. Now, on the buy side, as much as it does feel like you have the upper hand because you're not dealing with the mania of the spring market, it's something to keep in mind as well that yes, you are seeing more inventory and theoretically a slower time, but there are a lot of other people entering the market here as well. When you get into these big metropolitans, we just have new people coming in every day. So it's hard to know how long something will take to appeal to the right person because for the past 2 weeks, there may have been no one looking for the type of home that you have. And then all of a sudden, last night, somebody found out they have to move or they're relocating. They just got a little bit more serious about their search. And now that buyer's there. And that's why I tell sellers that patience is definitely something that's needed at the moment, but we're going to be analyzing showings a lot more. What is the activity like? What are the trends? What is the feedback? What kind of response are we getting from buyers? If we're not getting any showing activity in general, that usually just means it's being rejected from the buyers online. If we're getting a lot of showing activity but no offers, that means something about the house isn't sitting well with the buyers, whether it's the price, maybe the configuration, the floor plan, lack of amenities. There are certain things that they just can't pull the trigger. And those are all things we kind of just be mindful of and approach. Obviously, each situation is different, but that's how the market here is slightly unique. I come from the Northeast where the fourth quarter really was a bit different in the market I was in, but it was more of a small town market. Here we have a major metro. We do see a bit of a surge, and that's encouraging for everyone. So it's a bit of a dual-edged sword. I think one to end on it, one of the encouraging things for sellers is just the fact that they can still capture elevated pricing even in a market shift where we're seeing elevated inventory. And for buyers, they kind of go into it knowing that there are more options and it gives them an ability to either maybe take their time a little bit more, feel more comfortable with the process. It's a very strange time of year where it's almost a win-win for each person. And we don't typically see that, especially as things start leveling out. The only real concern is where the Fed goes from here with their future meetings. Are they going to keep being aggressive with the Fed rate cuts? Are we actually already in a recession? What does Q1 of 2025 look like? And how do the interest rates for mortgages get affected by all of that? So that's something to keep a close eye on. But for the Alpharetta market, as always, down below, I have a link to my Alpharetta guide. If anybody is relocating to the area or greater Atlanta, I would love the opportunity to answer any questions that you have. I've sold a house in almost every town within a 50-mile radius of the city. So I'm happy to give insights into different market dynamics for each suburb. And if you found the content valuable, please like and subscribe. I'll see you all in the next one. Thanks.